Alright, so what is up everybody? It's David here and welcome to our channel. Today, we're diving into the Australian real estate market. Is it worth your hard-earned cash? We'll break it down, no fluff, just the straight goods. I get DMs asking, should I buy property in Australia? And honestly, it depends. We'll explore the pros and cons. My goal is to arm you with the information you need. So grab a coffee and let's get into it. Let's talk about stability. The Australian real estate market is often seen as rock solid. Long-term trends show consistent property value increases. Factors like population growth and housing undersupply support this. People always need homes. This demand provides market stability. Investors find this stability appealing. It helps them sleep better at night. Decades of data show property is a good investment. Cities like Sydney and Melbourne are global property hotspots. This reliability is a big draw for many. But remember, past performance isn't a perfect predictor. Markets evolve with policies and global events. Economic conditions shift. Growth isn't always a straight line. It's an upward path with dips and plateaus. Understand this before thinking about investments. Okay, let's get to the exciting part, the reason many people even consider real estate in the first place, the potential for high returns. And yes, it's true, the Australian property market, particularly in those powerhouse cities like Sydney and Melbourne, has delivered some absolutely mind-blowing returns for investors over the years. But here's the kicker, and you knew there'd be one. These high returns are not evenly distributed, nor are they guaranteed. While Sydney and Melbourne have historically been the superstars, other regional areas or even different types of properties within those cities can perform very differently. So, while the allure of high returns is definitely a massive pro, it requires careful research and strategic location selection. Let's talk about tax benefits, crucial for your bottom line. In Australia, the government offers incentives to make property investment attractive. One key incentive is negative gearing. If your property costs exceed rental income, you can claim that loss against other income. This reduces your tax bill. Then there's depreciation. Claim deductions for the decline in value of fixtures and fittings. This paper deduction further reduces taxable income. Always get professional tax advice tailored to your situation. Alright, we've talked about some of the good stuff, but now we need to get real about one of the biggest hurdles for most people looking at Australian real estate, the incredibly high entry costs. Buying property in Australia, especially in major cities, requires a serious amount of upfront capital. Substantial deposits, often 20%, are needed to avoid lenders' mortgage insurance. And that's just the deposit. Then you have to factor in all the other associated costs that can really add up. There's stamp duty, legal fees, mortgage application fees, and inspection costs. Before you know it, you could be looking at an additional 5 to 7% of the purchase price just in transaction costs. This high barrier to entry locks many people out of the market, especially first home buyers. Let's talk about what keeps property investors up at night, the market's susceptibility to economic conditions. The Australian real estate market is linked to the broader economy, both domestically and globally. Economic booms push property prices up, while downturns can lead to forced sales and reduced demand. Interest rate hikes and global events can also impact the market. Property isn't immune to these economic forces, making volatility a significant risk factor. Congratulations on buying your investment property. Now comes the reality of managing it. Passive income can mean active work. Being a landlord involves many responsibilities. Finding good tenants is crucial. Screening takes time and effort. Even with screening, issues arise. Difficult tenants can be stressful. Evictions and repairs are costly. Maintenance is ongoing. Properties need regular upkeep. Repairs can eat into profits. Hiring a property manager helps, but it reduces your net return. You're still responsible for decisions. It's not a set and forget investment. Alright, so we've covered a lot of ground today, digging into the pros and cons of investing in the Australian real estate market. It offers stability and attractive returns, but also high entry costs and economic vulnerability. It's a complex decision that depends on your circumstances and goals. Seek professional advice tailored to your situation. Thanks for watching. If you found this helpful, like and subscribe. Leave a comment with your thoughts on investing in Australian real estate. Until next time, invest smart.